Thank you so much for watching Trading Day. The market in general is climbing this wall of worry. Inflation in the U.S. came in hotter than expected. The core measure is still quite a distance from 2%, and yet the market is rallying. And in fact, some of the most troubled names out there are also rallying. 3M is a great example of that. It is an embattled industrial that's had major litigation that it has to deal with related to so-called forever chemicals that leached into the American drinking supply, as well as defective earplugs that got it in hot water with the Army in the United States. Both have cost billions and could potentially cost billions more in litigation. It's one of the reasons 3M is one of the most unloved stocks out there. But they just announced a new CEO and the stock popped. Let's get perspective. We've got Robert Schein, Chief Investment Officer at Blanke Schein Wealth Management. Robert, it's always interesting to see the response by a stock when you get even incrementally positive news. I mean, we don't know for sure it's positive news. I think the market is taking it as positive that there's a new CEO, Michael Brown, coming from L3 Harris Technologies. But what is the signal to you of this management shift as a shareholder?
The first thing you want to see is when you announce a new CEO is just a positive momentum and a positive day for your company. And that's playing out in the market for them specifically. So it's a good sign. It also happens to be, sort of a new direction for them. They've been embattled, as we've discussed. You've talked about that. They've got a lot of lawsuits hanging over them, and their stock hasn't performed the last 3 years. It's down about 40% plus. And then the dividend is potentially still in question. That's kind of why you bring in a new management team, because then you provide cover for the opportunity if you do what's necessary to maintain the business moving forward. If they have to sort of cut the dividend, I don't think that they will. I mean, it's a 64-year history of keeping the dividend and raising it, and that's one of the sort of industrials that at this moment in time we like, because I think the new direction, a lot of the sort of litigation is coming to a close sooner than later. We'll have some clarity. That's what Wall Street likes. 6%
dividend yields, to your point. And it sounds like you're saying it's safe. You don't want to say 100%, but what odds would you put that the dividend is safe?
No, we don't know if it's safe, to be honest with you, because even on the investor call, management wouldn't be tied down and sort of left. They didn't specifically say one way or another. So that's still on the table. So it could, if need be. But most companies, when they have a history like that and management teams, they want to preserve that and keep that tradition moving forward at all costs. Because cutting your dividend is sort of it's a last resort move. So we don't know. I don't have the odds for you on this one. But, at the end of the day, the cash flow, let's say it's 6%, let's say it's 3%, you're still buying it at a 40% discount.
And it's important to be kind of upfront about those uncertainties. You listed, a lot of worries, a lot of issues that this company has to overcome, and yet you're a shareholder. You still think you could see returns going forward. Where does your optimism come from?
Yeah, we're buying into it, especially at these levels. Like we said, the valuation, new direction with management and leadership, clarity on some of the sort of clouds on the horizon. We're going to get through those with 3M. But I think the key here that we saw is the cost cutting. If any company is intent on cost cutting, and that's really where they're making their numbers, the top line growth will come eventually if management is doing everything right, and we believe that they will.
The background of the new CEO from L3 Harris Technologies, well, he's an outsider, and 3M doesn't typically select outsiders, so it's remarkable from that perspective. But he also has a history of being able to do deals. 3M is such a large conglomerate. Do you expect that M&A, maybe breaking up the company, as part of the turnaround strategy?
Yeah, that's why we love it. It's a fresh new look. It's looking outside of sort of their traditional thinking, what they've, traditionally been doing. And obviously what they've been doing hasn't been working as of late. So a new look, a fresh approach, some outside leadership deals, a great pedigree by the CEO. I mean, he did do a lot of, he was a deal maker. And so, yeah, that's another reason why we like 3M at this moment.
One other stock that you own that's a big mover today is Oracle. It is just sneaking through with a fresh all-time high on the back of its results as it touts its ability to kind of ride that AI wave. Is this just the beginning of big moves for Oracle as people get more convinced that it could be an AI trade?
You know, the conference call for Oracle was outstanding. And yes, the answer is yes, they're going to continue. They're just in the very first innings of being able to create new partnerships. We saw about 6 months ago, they partnered with Microsoft, 20 data centers, plus Microsoft just ordered three new ones from them. And now we also have a NVIDIA partnership announced. Again, the very early early stages of this AI trend that we're seeing. Oracle's a way to play it outside the Magnificent Seven. So you get sort of a down market catch up trade here. And then, management on their call said that they were a little bit too conservative on their guidance moving forward. And management really doesn't ever do that for corporate America unless they have significant confidence in the future. And they raised their guidance for 2024, 2025, all the way through 2026.
These two stocks, I mean, obviously very different, Oracle and 3M, but they do have something in common. They're cheap relative to their peers. And for a market where people often complain about how expensive things are, this just goes to show that there are still some value opportunities out there.
It's exactly what you want to see on the heels of last year's market. Last year, we had 88% of the basically growth or profit came from 7 stocks. And so for a stock market to continue and the markets to continue, we need broadening out. And in 2024, we are seeing just that in the U.S. markets, and that's a very healthy sign. So you want to look at industrials are playing catch up. There are other areas of technology outside the Magnificent Seven, like we said. Healthcare is another component, but the portfolio, financials, the broadening out effect is actually taking place, and it's a healthy sign moving forward. So yeah, there's a lot of value out there. I wouldn't be a set it forget it S&P 500, just roll the dice and put it on the S&P. Because individual names will outperform like they did last year, like they will this year. And that's what we're finding.
Do you think the market is being too complacent about this morning's read of inflation? I mean, the first cut is still priced in June. If inflation is where it's at right now, which is where it's been for a couple of months, is the Fed really going to cut?
So we've been in the camp of, and we've been saying this the last 6 months, and it's playing out in the first 3-4 months of this year, which is the Fed has to be higher for longer. So they have to maintain this interest rate higher for longer. The market today was a relief rally, right? We got a hot number, but it wasn't too hot, and it wasn't Goldilocks. Otherwise, we see a huge rally. It still keeps the rate cut on the table for June. The Fed is walking this tightrope. They're extremely data dependent. It's not an easy job this year. And I'm not confident that they could stick the landing because they will hold the interest rate as long as they can until something breaks. And that's the biggest concern because historically that's what they've been able to do is just that. That's the playbook. They're always reactionary versus, and I think 1995 was one of the years where they actually did it. And hopefully they are preemptive on that. But we'll see how it plays out.